CEO Rob Lynch with our own Kate Rogers. Kate?
Morgan, thanks so much. Rob, great to see you. Thanks for joining us.
Thanks, Kate. It's great to see you.
So your last two jobs at Papa John's and Arby's were very clear turnaround jobs for the company. I'm wondering what the top challenge is right now at Shake Shack and what drew you to this opportunity.
You know, Shake Shack's at a pivot point in its history where it's built this great foundation of amazing Shacks, amazing team members, culinary background driven by, Danny Meyer's Union Square Hospitality Group. And now we need to scale. We need to grow. And it's a perfect time for us to do that because we're kind of hitting on all cylinders. The teams have done a great job building an infrastructure grounded in culinary background, enlightened hospitality, taking care of our team members and our guests, and built a technology platform that we can build off of to scale both domestically and globally. So all that attracted me here, and since I've gotten here, it's been amazing to really dig in and figure out how we can continue to get better every day.
And Rob, you're not participating in the value wars in the same way some of the other fast food players are with those $5 offers. You're also not really seeing a consumer pullback. I'm wondering how sustainable it is to not have that $5 platform, and what's your read on the consumer more generally right now?
Shake Shack has always been about offering premium ingredients, premium quality with premium service and hospitality, and that model seems to be working for us. Now, we've layered in some great marketing and promotions that are a bit new to Shake Shack. Shake Shack hasn't historically invested as much in marketing as a lot of other brands. Our marketing teams and our operators are really doing a lot of amazing work to make sure that we're continuing to deliver premium quality and letting folks know what's different about Shake Shack so we can command the kind of checks and tickets that we need to make our model work.
Rob, it's Morgan. It's great to have you on Overtime. I want to get your thoughts on labor, because I know not only are you implementing a new model around labor and how you're staffing your restaurants, but you also recently announced that you're closing some restaurants, including a number in California where we've seen the minimum wage tick up to $20. Your thoughts on what we're seeing across the labor market?
You know, in this business, you have to challenge yourself to continuously improve and look at every facet of your business. When I got here, we looked at all of our Shacks, and it's amazing that, we've been able to open a lot of Shacks across the country. And when we looked at our portfolio of over 320 Shacks, 9 stood out as not delivering the return on the resources that we were investing in them. So we closed those Shacks. They were in California. They were also in Texas and Ohio. And the great thing about, the fact that we closed 9 Shacks means that 311 of them are returning on the resources that we're investing. So instead of putting operations resources, marketing resources up against underperforming assets, we're putting them up against the opportunities for us to grow the fastest.
Rob, great to have you with us. Every time I go to Shake Shack, I wait what feels like a long time. Is that a problem, or do you just wait for premium, or is there an order ahead strategy that helps address that? How do you think about it?
Well, we do make everything fresh to order, so it does take a little bit longer than it does at some maybe traditional, fast food restaurants that have some food waiting there prior to the order. But we're doing everything we can to be as efficient as possible. We've got a lot of initiatives in our operations team, making sure that we are driving productivity through equipment innovation, process innovation. So we're also leveraging a lot of data and analytics to understand how we can get better in our drive-thrus. Drive-thru is a new model for Shake Shack, and we think it has huge potential. Less than 10% of our Shacks today have drive-thrus, and as we continue to grow rapidly throughout domestically and internationally, that model is going to have to be fast. So we're working to improve our throughput across all of our system.
And Rob, one last question here. At kiosks, as John mentioned, when you go to Shake Shack, a lot of times you are ordering via kiosks. They have helped to trade up with the consumer, kind of upsell them. I'm imagining they're also saving on labor. So what types of new store formats can you envision as you couple those two goals?
The sky's the limit for Shake Shack. Historically, we've had big Shacks that depended on kind of walk-up traffic, and the orders were all placed at the counter. Today, a vast majority of our orders come through digital channels. That includes third-party delivery, digital web app, as well as our kiosks. So the digital channels allow us to really interact with our customers in a way that offers them more value prior to their checkout. So sometimes when you're, having face-to-face orders going through the system, people don't necessarily know, what to offer you. Through our kiosks and our app and our web, we're doing trade up. It's driving mixed benefit and ticket and profit accretion across our system. So we're going to continue to double down on our technology investment, see a lot of opportunity there.